Microsoft CEO predicts quantum computing will supercharge cloud tech. Quantum computing is poised to revolutionize cloud technology like never before, and Microsoft is betting big on this potential accelerator. The real story here, how one of the world's tech giants is strategically pivoting toward a future where quantum systems and AI could fundamentally reshape computing infrastructure. But let's explore what makes this shift both groundbreaking and controversial. At its core, Microsoft CEO Satya Nadella's vision positions quantum computing as the next major breakthrough after GPUs and AI advancements. Speaking during the company's FY 2025 Q4 earnings call, Nadella declared that quantum will act as the cloud's next big accelerator, marking a bold departure from short-term investments. With earnings surpassing expectations, $76.4 billion quarterly revenue, up 18% year over year. Nadella leveraged momentum to emphasize long-term bets. The next big accelerator in the cloud will be quantum, he stated. And we're making real progress. Well, here's the catch. While cloud and AI remain immediate revenue drivers, Microsoft is bankrolling quantum as a high-risk, high-reward endeavor. Earlier this month, the company deployed what it claims is the world's first operational Level 2 quantum system in partnership with Atom Computing. For non-experts, Level 2 systems represent a critical milestone. Think of them as quantum's equivalent of a capable adult, capable of managing errors and maintaining logical quantum bits, qubits, over time. While details remain scarce, this deployment signals Microsoft's intent to lead, not follow, in the quantum space. The infrastructure investments tell the full story. Microsoft now operates over 400 global data centers, with every Azure region equipped for liquid cooling, a necessity for power-hungry quantum systems. Over the past year, the company added 2 gigawatts of new capacity, preparing for a future where classical and quantum workloads coexist. Our approach spans decade-long arcs, Nadella explained, framing quantum as part of a broader innovation cycle. We deliver milestones quarter by quarter, but we're building for generational impact. But wait, the real tension lies in balancing today's AI dominance with tomorrow's quantum ambitions. Azure revenue surged 34% to $75 billion annually, driven by AI workloads. Foundry APIs now handle 500 trillion tokens annually, up 7x year on year, serving 14,000 customers like NASDAQ. Copilot tools hit 100 million monthly users, while GitHub Copilot evolved from basic code suggestions to full-scale agent mode, automating developer tasks. Yet behind the scenes, AI's complexity is reshaping Microsoft's monetization strategies. Executives hint at hybrid pricing models, per-user fees for basic AI features, consumption-based charges for intensive workloads. But the question remains, how will this approach land with cost-sensitive customers? The financial implications are stark. While AI demand is outpacing infrastructure supply through 2026, giving Microsoft supply chain advantages, cloud gross margins dipped to 68% due to scaling costs. But Nadella remains unapologetic. AI isn't a feature add-on anymore. It's embedding deeply into workflows. Compare this to traditional software models, and the stakes become clear. Will enterprises accept evolving pricing for complex AI services? Or will this spark a backlash against AI tax? Perceptions? As Microsoft closes in on a $4 billion market cap, shares touched $515 post-earnings. The company's quantum moves represent a calculated gamble. The partnership with Atom Computing could legitimize Microsoft's quantum lead, but it also raises questions about accessibility. Critics might argue that commercializing Level 2 systems this early risks overpromising. After all, most enterprises still grapple with basic quantum literacy. Then there's the balance between innovation and practicality. While Nadella champions decade-long arcs, Wall Street rightly wonders, when will quantum translate into meaningful revenue? This brings us to the bigger debate. Should tech giants prioritize bleeding-edge technologies like quantum over near-term AI dominance? Microsoft's answer seems clear. As CFO Amy Hood noted, the company plans to spend over $30 billion on infrastructure in FY 2026, with quantum-friendly data centers at the core. We're not just building for today's workloads, she emphasized. We're shaping the architecture of tomorrow's computing. But the jury's still out. Quantum computing's potential is undeniable, but it's years away from mainstream impact. Meanwhile, AI's high stakes, both technically and financially, dominate today's earnings. The real question for investors and developers alike? Can Microsoft navigate this dual-track strategy without losing focus on its AI golden goose? Science fiction, or smart next chapter for the cloud? Let's discuss this pushed either end. Where do you stand on Microsoft's quantum gamble versus AI dominance? Quantum computing stocks surge. Microsoft CEO predicts next big accelerator. Imagine a world where computers can solve problems exponentially faster than ever before. Quantum computing is poised to revolutionize technology, and the stock market is taking notice. But here's where it gets exciting. Microsoft CEO Satya Nadella has declared quantum technology as the next big accelerator in cloud computing. This bold statement has sent ripples through the quantum computing sector, causing stocks like IonQ, Rigetti Computing, D-Wave Quantum, and quantum computing to surge. During Microsoft's recent earnings call, Nadella emphasized, the next big accelerator in cloud will be quantum. This prediction has not only bolstered investor confidence, but also sparked interest among tech enthusiasts and industry experts alike. Let's dive deeper into how this announcement has impacted the stock market. In early Thursday trading, we observed a modest 4% increase in IonQ's stock price, mirroring gains seen in D-Wave Quantum and quantum computing. Rigetti Computing experienced a near 6% rise, indicating a broader sentiment of optimism within the quantum computing community. These movements suggest that investors are beginning to recognize the potential of quantum technology and are positioning themselves accordingly. Technical analysts are also keeping a close eye on these stocks, identifying potential breakouts and support levels. For instance, IonQ could be poised to reclaim its 50-day moving average line, forming a cup-with-handle pattern, a bullish sign for investors. Rigetti Computing stock is also showing signs of strength, aiming to surpass its cup-with-handle buy point. Meanwhile, D-Wave Quantum might bounce back from its recent pullback, finding support at the 50-day line following a breakout. However, it's important to note that all four stocks experienced as these companies prepare to report their second quarter earnings in the coming weeks. Investors will be eagerly awaiting detailed financials and progress updates. Specifically, IonQ will release its earnings on August 6th, followed closely by D-Wave Quantum on August 7th. Rigetti Computing is scheduled to publish its results on August 12th, while quantum computing is expected to announce its figures sometime in mid-August. These reports will provide valuable insights into the financial health and technological advancements of each company. Interestingly, Microsoft's own stock saw a significant boost, rising more than 8% in pre-market trading due to strong earnings and guidance. The success of its Azure cloud computing business played a crucial role in driving this growth, highlighting the broader impact of advancements in cloud technology. So, what does all this mean for the future of quantum computing? Will these stocks continue to climb, or is there a risk of a market correction? The answer remains to be seen, but one thing is certain: quantum computing is here to stay, and its influence on the tech landscape is just beginning. As we look ahead, it's worth considering the broader implications of quantum technology. Could it redefine industries such as cryptography, pharmaceuticals, and material science? Or will traditional computing methods remain dominant? These are intriguing questions that warrant further exploration. And this is the part most people miss: the potential ethical and societal impacts of quantum computing. As this technology advances, how will we ensure it's used responsibly? What measures need to be put in place to protect against misuse? In conclusion, Satya Nadella's declaration marks a pivotal moment in the quantum computing journey. It signals a growing recognition of the technology's transformative potential and sets the stage for increased investment and development. As we navigate this exciting frontier, it's crucial to stay informed and engaged. For the latest updates on stock market trends and more, follow Ed Carson on Threads @EdCarson1971 and X/Twitter @IBDECarson. What do you think about the future of quantum computing? Share your thoughts in the comments below. Microsoft's data center growth leading the cloud computing race. Microsoft boldly claims to be scaling data center capacity at a pace that outshines all competitors. But here's where it gets controversial. While Microsoft's impressive growth in data center capacity is well documented, the devil is in the details. The company's recent announcement is backed by some intriguing numbers, and as always, there's more to the story than meets the eye. Let's dive in and unpack what this means for the industry and, more importantly, for you. The key to Microsoft's accelerated growth lies in their innovative use of artificial intelligence and machine learning to optimize their data center operations. This cutting-edge approach allows them to scale faster and more efficiently than any other player in the market. But here's the part most people miss. The performance metrics that Microsoft is boasting about are based on back-tested results, a method that uses historical data to predict future outcomes. But here's the catch. Back-tested results are not a guarantee of future performance. They come with significant limitations and assumptions that could drastically alter the final outcome. For instance, the model assumes that Microsoft would have been able to purchase recommended securities and that markets were sufficiently liquid to permit all trading. These assumptions may or may not hold true in real-world scenarios. But let's pause for a moment and consider this. What does this mean for the average investor? Are we looking at a genuine leap forward in data center technology, or is this just clever marketing? And this is where it gets really interesting. While Microsoft's claims are impressive, they also invite scrutiny. The lack of actual trading data and the potential for overcompensation in backtesting means that real-world performance could be very different. So, here's a thought-provoking question for you. Do you think Microsoft's back-tested performance truly reflects their ability to scale in the real world? As always, I encourage you to share your thoughts and opinions in the comments below. Let's start a conversation about the future of data center technology and what it means for businesses and investors alike.